Thank you. It was another carnage-filled day on Wall Street. The Dow lost 425, the lowest closing for 2018. The S&P 500 was down 53. The Nasdaq dropped 174. For the week, the Dow was off 5 3/4 percentage points. The S&P 500 was off 6. The Nasdaq dropped 6.5. Let's get some analysis now from Deirdre Bolton of the Fox Business Network in New York. Good evening, Deirdre.
Good evening, Brett. You have to go all the way back to January 2016 to see the stock market lose this much ground in 1 week. So financial tech stocks, they were the biggest weights. Investors are basically worried about three big forces: a potential trade war with China, the direction of interest rates, and the affordability of the $1.3 trillion in new government spending. So most investors think that the tariffs that we have imposed on China and the ones that China has imposed in retaliation are just the beginning. So as a result, some investors are reconsidering their positions in Boeing, Apple, Nike, Intel, Starbucks. Each of those companies got between 10 and 20% of their sales from China last year. The Federal Reserve raised interest rates on Wednesday, penciled in 2 more hikes for this year. So higher rates makes all borrowing more expensive, and that can be a headwind for the economy and for the stock market. Congress passing and the president signing that massive spending bill, was a darned if you do, darned if you don't scenario for market sentiment. But today, it added pressure. So tech has been a market bright spot in the past year, but with Facebook on the ropes, the sector fell like all others. Some traders telling me this week feels like that brutal 2-week sell-off that we saw in February. So buckle your seatbelts for next week, Brett.
Deirdre, thank you. Well, China is fighting back against President Trump's decision to impose those massive tariffs on their products sent to the U.S., and that leaves the world's 2 largest economies on the brink of a major economic conflict. Correspondent Jillian Turner looks at what that possibly could mean.
U.S. farmers are increasingly fearful that a full-fledged trade war with Beijing is on the horizon. That includes Rob Schaefer, a 4th-generation soybean farmer in Emory, Illinois, who also serves on the board of directors of the American Soybean Association.
I'm just trying to make sure that we get it through to, the administration as far as, and I think they understand it, but I just want to make sure that they understand how it's affecting the people out in the Midwest and as far as, my bottom line.
China is now threatening to impose its own retaliatory tariffs on up to $3 billion worth of U.S. imports. And American farmers caution that such a move might incentivize competitors of American companies to step in and grab their business.
Brazil and Argentina, are willing and eager to take our share of the Chinese market. And once you lose a customer, it's awful hard to get them back.
China's Commerce Ministry is currently considering a 15% tariff on American exports to include dried fruit, wine, and steel pipes, plus a 25% tariff on pork and recycled aluminum. China's also drafted a list of 128 American products it would target in the future should the U.S. and China fail to reach a bilateral trade agreement.
We're losing $375 billion with China. It could be $504 billion, depending on the way you count. It's bad.
But the U.S. isn't just battling China in the traditional trade sector. In addition to the disputes over hard goods, such as steel and poultry, the two sides are now clashing over the tech sector. Over the past 2 weeks, alarming signs of a major fallout have emerged. The Trump administration blocked China from buying U.S. tech giant Qualcomm, a deal worth $117 billion, and China subsequently pulled its own multi-million-dollar investment from U.S. private equity powerhouse Blackstone.
Our society is dependent upon innovation in ways that it hasn't been before. But the Chinese are taking the fruits of that innovation and they're stealing it in ways which are predatory, mercantilist, and completely unacceptable.
This ongoing U.S.-China tariff dispute underscores Washington's latest worry that China will displace America as the world's innovation hub, and that Shanghai or Shenzhen may soon become the new Silicon Valley.